Welcome back to EG Financials. Hope you're having a good Friday. Today's October 20th, 2023. We now have all the updated real estate market forecasts from the top institutions: Fannie Mae, Mortgage Bankers Association, Zillow, CoreLogic, and Freddie Mac. We'll also be looking at their projections for the 30-year fixed rate. And I'll be comparing October, so the new numbers versus last month's September numbers. And then we'll go through and take a look at some key notes from the Freddie Mac report. It'll be a quick 1 or 2 minute review. So let's go ahead and get started. Starting off with Fannie Mae, we can see that they revised their projections for home prices for this year and next year. So for 2023, last month, they were saying that it would end the year with a 3.9% increase in home prices. Now they're saying 2023 will end the year 6.7% higher. And then for 2024, they increased their projections to see a 2.8% increase in home prices compared to last month's projections where they expected a slight decrease. Mortgage Bankers Association didn't make any changes to their home price predictions. Okay, and next we have Zillow. In their most recent real estate market outlook, they revised their 2024 projections for home prices down to 2.2% increase. Last month, they were expecting to see 4.9% increase in 2024, so that's a revision downward from Zillow. CoreLogic, slight revision downward from 3.5 to 3.4%, and then Freddie Mac, unchanged for home prices. So to quickly summarize these home price projections for next year, 2024, Fannie Mae came in with the upward revisions of home prices. Initially, they expected a decrease of 0.7% in home prices. Now they're saying they're expecting 2024 to increase by 2.8%. And Zillow actually revised their projections downward from an increase of 4.9% to now expecting only a 2.2% increase nationwide. Let's go ahead and average out the home price projections for 2024 so we can have a nice comparison between last month, September's numbers, and then this current month, October. Okay, here we go. So for October 2023, if we average out all of these projections from these institutions, overall we should expect about a 2.1% increase in home prices for 2024. And that's an increase in the projections for home prices compared to last month, when it was 1.9%. So again, we do have high interest rates, over 8% at the moment, but the demand just outweighs the supply at the moment. So many of these institutions are expecting home prices to hold steady or see a slight increase in the next couple of years. Okay, and next let's take a look at the new updated projections for the 30-year fixed rate. Starting off with Fannie Mae, in 2023, they're expecting rates to come down to 6.8%, which would be a big move because currently we're close to 8%. So from 8% down to 6.8% in the next couple months, that's a pretty big move. And then in 2024, they're expecting mortgage rates to be pretty flat. And again, the Federal Reserve has said they're keeping rates higher for longer, so this would be in line with those comments. And then we have Mortgage Bankers Association expecting 2023 to end the year at 7.2%, and then in 2024 down to 6.1%, and then in 2025 we'll see a 5 handle on mortgage rates being in the mid 5s. And before I continue on, I just want to ask you all to please like the video and subscribe so you can get these updates as they come out. Let's continue on to read the key highlights from the Freddie Mac report that was released today. Okay, and here we go. Again, this was released today, this morning, and this is their economic and housing outlook for October 2023. And this will take 30 seconds to a minute to get through. Millennials are not forming households at the same rate and age as boomers and Gen Xers. If they had, there would be an additional 3 million households in the US today. The US economy continues to expand according to the latest estimates by the Bureau of Economic Analysis. GDP growth for 2Q 2023 was 2.1%, while first quarter growth was revised upward to 2.2%. The labor market continues to remain strong. The unemployment rate remained unchanged at 3.8% in September. On the inflation front, price pressures are showing signs of abating, with the August reading coming in below expectations. While overall inflation has come down, energy prices have been on the rise again, presenting upside risks to the course of future inflation. Interest rates have been above the 7% mark since August of this year, the highest level since the early 2000s. Elevated rates are pushing more home buyers to delay their home purchase and to wait for a more opportune time. While both housing demand and supply measures have been declining, the tighter level of supply outweighs the decrease in demand, which translates to upward pressure on house prices. We expect U.S. economic growth to slow at the end of this year and remain muted in 2024. Inflation will continue to moderate, but the reduction will be gradual, so policymakers will hold rates higher for longer. In this environment, mortgage rates will remain elevated, though a reduction in bond market volatility will allow the spread between treasuries and mortgage rates to narrow back towards historical averages. And that's it for today. Make sure you like the video and subscribe so you can get more of these updates. Thank you.